Welcome back to our channel, YouTube investors. Today, we've got something special brewing, a detailed breakdown of Starbucks Corporation. So, grab your favorite coffee and let's dive right in. First up, let's talk about the P/E ratio. Starbucks currently boasts a price-to-earnings ratio of 26.26 trailing 12 months, slightly below the 5-year average of 30.75. Looking forward, the forward P/E is at 19.62, suggesting positive expectations for the company's future earnings. Now, the price-to-earnings-to-growth ratio or PG ratio, which takes growth into account, is sitting at 1.58. An interesting indicator for potential investors to consider. Remember that a value around 1 is considered excellent to investors. Now, the return on equity isn't available due to accumulated losses, but the return on assets stands at a solid 14.37%. These numbers indicate how efficiently Starbucks uses his shareholders' equity and company assets to generate earnings. Speaking about earnings, the earnings per share or EPS is at 3.81, with an impressive estimated growth rate of 16.63% over the next 5 years. However, in yesterday's earnings quarterly report, SBUX did not fill analyst expectations, despite continuing growth year over year. For those income-seeking investors, Starbucks offers a dividend yield of 2.47%, and get this, a remarkable 17.11% growth in dividends over the past decade. However, his dividend has not increased a lot in the last increase, and this spectacular growth can be decelerated in the near future. Moving on to profitability, Starbucks maintains a 14.97% operating margin and an 11.47% profit margin. These figures are crucial for assessing how efficiently the company turns revenue into profit, and Starbucks has been increasing them annually. Now, here's where it gets interesting. Starbucks has shown positive revenue and earnings growth over the last 8 years. However, despite this, its total return has been lower than VO in the last 5 years. Continuing with the financial health, the debt-equity and long-term debt-equity ratios aren't available due to accumulated losses affecting equity. Always important to consider the financial health of a company. Over the last 52 weeks, Starbucks has seen a minus 13.21% average price return, but don't let short-term fluctuations cloud your judgment. With a market cap of $106.52 billion, analysts predict an upside of 16.77% in the next 12 months, projecting a price of $109.86. However, my fair value estimate is $89.75, suggesting a potential overvaluation compared to both analysts' predictions and the current price. And there you have it, folks, the comprehensive scoop on Starbucks Corporation. Remember, these numbers are just part of the picture. Always do your own research and consult with a financial advisor. If you enjoyed this video, give it a thumbs up, subscribe for more financial content, and let us know which stock you want us to break down next. Until then, happy investing!